So let's start. Let's start. No time to waste. We are already 30 minutes late. We're supposed to start since 9 o'clock. So because of network issue, we are starting now. So good evening, everyone. Um, so the purpose for this class is just to let you guys understand how the trading, the synthetic market works, right? You know, almost everyone is familiar with um currency markets. A lot of people are just into foreign currency markets. Nobody has any prior knowledge about synthetic indices. So I'll be teaching you guys how synthetic indices works. Okay, it's a different market, but at the same time, it operates with price action. Okay, so the theme of this class is introduction to um free guide to synthetic indices. All right, so I'll be guiding you guys on how the synthetic market works. So let's get started. What is the synthetic indices? What is synthetic indices? What is DERIV? DERIV is the broker. Synthetic indices is the market itself, is the currency pairs in the DERIV and broker. So they are simulated trading tools that simulate or reflect real financial market behavior. So it has to do with the real world market, like buying and selling of goods. Okay, so now remember, currency market has to do with the banks, the country economy, um, and um, so many activity affecting the market. Okay, it has to do with the transaction in the bank. That's why the market operates from Monday to Friday. Monday to Friday. It doesn't operate Saturday and Sunday. That's the currency market. But synthetic market operates 247. So it has to do with buying and selling of goods and services in the real world. Okay, that's what affects it. So there are unique indices that mimic the real market volatility and liquidity. So it has to do with the real market, like I said, buying and selling of goods and services. So there's nothing to worry about when you are trading synthetic indices. Now let's do some comparison, quick comparison between currency markets and synthetic indices. So in synthetic indices, news does not affect the pairs, does not affect the market. Take notes. News does not affect the market. But in currency, I can be on a swing trade and just in 2 days, holding for the trade for 2 days, all of a sudden news will come from nowhere, boom, and it will take me back to my entry. Are you getting the difference? So news affects what? The currency market. Why it does not affect the synthetic market. So you have a lot of advantage when it comes to synthetic. Okay. There's no best time to trade. Yes, there's no best time to trade synthetic. Every time, anytime, any day, you can pull up your computer, your laptop, analyze, then boom, you're inside the market making money. You don't need to wait for London session. You don't need to wait for New York session. You don't need to wait for all those
As
sections.
the class started, I didn't hear anything.
Hello? If you are hearing me, please indicate. If you can hear me, indicate.
Yes, we are hearing.
So
We can hear you.
who is saying that he is not hearing me? Check your network. See, if you are not hearing me, this is what you do. If you are not hearing me, log out and log in again. Log out and log in again. You'll be able to hear me.
I'll fix it. I'll fix it.
Okay, good, good. So remember, I'm recording this class for future purpose. So if you are missing out, don't need to panic. I'm already recording it. So the last thing I said was there's no best time to trade in synthetic indices because the market operates 247. As I'm talking to you, the market is moving perfectly okay. It's moving fine right now. There's no slow movement. There's no speed. It doesn't work like the way currency works. Whenever there's a news release or uh, there is fundamental analysis going on, it works the way it normal market works, and the volatility is high. So any small movement is fetching you big amounts of money with a good risk management. Okay. So there's high leverage, like I said, high leverage and tight spread. This is another advantage over currency. Now, this high leverage and the tight spread is the most important thing. It's so sweet in the sense that, let me show you guys quick example. Um, so this is the chart of DERIV synthetic. So to access this chart, after you open the DERIV account, I posted a link in the group. Use the link, register for the broker, and get your account verified. In 30 minutes, you'll be verified. Make sure you use the link. Make sure you use the link. In 30 minutes, you'll be verified. So this is what I'm talking about, right? About tight spread. So I seen this tight spread. The way the spread is on the chart, that's the way it is in the MT5. So any movement is fetching you money. At the same time, if it goes the wrong direction, you are losing big amount of money. So the sweet part of this is when you take a sniper entry, a sweet entry, and market is going to a direction. Believe me, you're going to enjoy synthetic indices because the spread is so tight. You won't even notice that there are two spread. You know, currency has these two spread, and whenever there's a huge spread in the market, the brokers are taking your money. And Xness, they do this a lot of time. They always increase their spread between 9 p.m. to 11 something p.m. Between this time that market is going to open. I don't know why they do that, but that's the period they thief people's money. They steal your money, all in the name of spread. Please turn off your mic. Turn off your mic. I'm hearing my voice over there. So tight spread is in the synthetic market, right? But in the currency market, there's no tight spread. So tight spread is very, very, very important because if the spread is big, the broker are taking your money. But if the spread is tight, the money goes to you. Nobody is taking your money. So when it comes to strategy, who is joining in now? We are almost half of the class. So what strategy do you think is going to work in synthetic indices? It's very simple, yeah. It's very simple. Price action is highly recommended. Highly recommended. Is high. I'm not talking about SMC. I'm not talking about ICT. I'm not talking about fair value gap. Take note. Take note. Price action. The simple price action you learned during your beginner um, process of learning forex market, forex trading. Those price action you learned, those support and resistance, the trend line, the break and retest, the chart pattern, double top, double bottom, they work 100% in synthetic indices. It's so simple in the sense that a beginner can be pulling out a big amount of money in synthetic indices. Now, the secret is for you to know when to enter the trade. That's the most important thing. Time for you to enter. Okay, your entry matters in synthetic because any movement against your trade is going to take you out. Because I know majority of people here will be starting with small equity from 30, 20, and so on and so forth. So that's why I'm saying this. Unless you are going to deposit from 500 and above, then you have nothing to worry about. But if you want to last long with your capital, make sure you learn a good entry. Entry is key. I have my own entry, and I'll be sharing that in the advanced class. So this is just the beginner class, telling you guys about synthetic indices. So take notes. Entry is key. Once you master a good entry that works in synthetic indices, you are set for life. Nothing is going to stop you. Nothing. And here's another thing. Synthetic indices, they always reverse a trade. Always. They always reverse a trade. Now here's the thing. If you don't have a fixed psychology, a clean psychology for you to know that okay, whatever happens, I'm going to hold this trade. Is either SL or TP. That's the secret. Is either SL or TP. So whenever you see a trade reversing to your entry, you don't need to panic because they are normal price movement in derivative synthetic. They are normal price movement in derivative synthetic. They always reverse trade, but majority of the time, the same trade that that is being reversed is going to end up hitting your TP. I seen it. That's the only issue. That's the only issue DERIV has. And this reversal waiting, it happens in currency too. Today I traded a small account using gold. Gold reversed multiple times to my entry, but at the end of the day, it went to my TP. So it's a normal thing in every market out there. The normal price movement in every market, price reversal. It happens anywhere, anytime. Price. Oh my God, where have you guys been since? So price reversal happens every time, anything. So you don't need anything to worry. You don't need to worry about anything because it's normal. It's normal. So let's talk about the most important aspect. I want to tell you guys a secret. So this is what you need to know before you start trading the synthetic market. You need to master these things. You need to master, okay, you have 18 people so far. So you need to master this. I'll write it boldly here. I, I highly recommend the price action. We still have 40 minutes to go for the end of the class. And here's another thing. If I didn't finish up today, we'll continue tomorrow. If I don't finish up today, we'll continue tomorrow before any other thing. Please jot down these details. Jot down these details. You need to master this. Price action is the key. Very important. You don't need all those SMC. And all right, you guys know about breaker block. The break the
Make
break
make it work on TV. Make it good on TV.
Who is this one now? Please turn off your mic. Oh shit. Take notes. So price action is key. So these are the price action you need to master. These are the price action you need to focus on. The supports, support and resistance. Support and resistance. Trend line. Demand and supply. Trend line break and retest. It works every times. And also we have the double top and double bottom. Okay, master these key strategies and practice it, then start trading. These are the basic simple stuff works. I know a guy. I don't know if you guys know him. Ebuka Adino. This guy trades with just the trend line break and retest, and this guy is pulling out huge amount from DERIV. I'm not talking about $300, 500. I'm talking about $10,000, 5K, 20K, 40K, 50K. Just by doing what? By using break and retest strategy. Very simple. So basic things are still valid in the synthetic indices market. Those basic stuff we do. Don't need to crack your brain. Don't need to start stressing yourself with so many different strategy. Which one should I use? The basic stuff still works in the market. It works in the synthetic indices. I'm not talking about currency. I'm talking about synthetic indices here. DERIV synthetic indices. So the basic stuff still works here. What else are you looking for? So last and most important thing, liquidity. See, liquidity. This is something you will never escape from. Okay, liquidity. So liquidity appears on the charts, on every chart. Bitcoin chart, crypto charts, currency charts, and synthetic indices charts, the commodity and stock charts. All these charts, liquidity always falls, is still active on the charts. So liquidity is something that you don't escape from, because why? It's very vital, because markets are always looking for a way to take your money. So you won't escape from that. So if you know about liquidity very well, then you are good to go. You have solved 20% of the synthetic indices problem. Liquidity. But most of the time, this liquidity are not that valid. They are not really valid in the synthetic indices market. Yes, because I told you before that the basic stuff still works in the market when it comes to synthetic indices, like support and resistance, trend line, demand and supply, trend line break and retest, double top and double bottom. All these are still valid in the market. Okay. All these are still valid in the market. So you have nothing to worry about. So when it comes to taking entry, here's a secret, and I've not told many people about this. So this is my personal secret. When it comes to taking entry, so for instance, we have this setup here. So this is volatility 25. Let me introduce guys to the pairs available. So we have volatility, different volatility, right? Under DERIV, we have volatility 10, 1x. We have volatility 10, volatility 25, 1s, and volatility 25. I seen it. They are we have is like having a big brother and a junior brother. Big brother and a junior brother. And each of these oh my god. Oh my god, who is this? Who is this?
Get at mute yourself, I beg.
Oh god. So listen to me. Each of these pairs here is like having a senior brother and a junior brother. So the senior brother are the ones with 1x attached to it. The ones with 1s attached to it. So just like we have volatility 10, 1x, if you go to your demo and practice it, trade it, you and also trade the volatility 10, you will see the difference in price movement. You see the difference in the volatility, in the volume. What is volume? Volume is the amount of money in a particular pair. Okay, so the amount of money in 101x is too much, in the sense that if you use the same lot size in entering the both of them, the lot size in 1x is going to be the profit you're going to make is going to be bigger than the profit you're going to make in volatility 10. I seen it. So the 1x is always like a senior brother. Just like we have Bitcoin and gold. Bitcoin is higher than gold by far. So the lot size you're going to use in gold and the lot size you're going to use in Bitcoin are going to be the same, but the profit, the return of profit is not going to be the same. Okay, because the volume are not the same. So now we also have volatility 25 1s index, and also we have volatility 25 index. Now the volatility 25 1x is the volume is higher than 25 index. Same applies to this, same applies to this, same applies to this, same applies to this. So scroll down, see so many of them. And then again, in derivative synthetic indices, you can also trade your gold. See them. So this is like a mixture of currency and synthetic indices. So once you join DERIV, you don't have any business going back to Xness and trying to trade, because it offers currency. There's no excuse. You can also trade your currency in DERIV. They made everything available. We have forex, we have stock indices. So you can trade your stock market. We have the Wall Street, we have US 500. So many stocks available. We have the commodities. So here's the gold. Now if I open it, you see the same price now. Gold is currently at $2,853.13. The market is still open. So like I said, I traded gold, and the same reversal I used to see in synthetic indices, I was seeing it in gold today. So gold was like fluctuating. It was giving me something like this. Higher, lower low, lower high, right? So after creating lower high, what next? Lower low, right? So I took my entry somewhere here, and gold did something like this. It came down, went back to my entry. I seen it. Went back to my entry. Came down again. Went back to my entry. Just to form the lower low. Gold was doing this. Unnecessary reversal. So what am I trying to say? I'm trying to tell you that the reversal are the same anywhere it happens in the both market. You can't escape reversal. So the main thing is your psychology. Is your psychology that matters. It's your psychology that will determine if you're going to be profitable or not. Because if you don't have a strong psychology, you end up messing up your setup. What do I mean by that? You end up closing a trade that you're not supposed to close. You're not supposed to close. So because of small reversal, you will panic and jump and close the trade because you think the market is going to take you out. No. Once your psychology is in check, you don't have any reason to be closing a trade from nowhere. You just close the trade. It doesn't make sense. Okay. So make sure your psychology is in check. So that was what gold did to me today. And but at the end of the day, I was able to pull out my profits and I made money with it. So still talking about the pairs in synthetic indices. I've talked about this. Also, crypto. We have BTC and Ethereum USD. We don't have all the crypto assets here. I don't know why they didn't apply it. But apart from the cryptocurrency, other currency are available. The forex, almost all the pairs in the forex markets are here. They are the same thing. If you go to your chart on Euro USD now, oh my God, is it network? Hope it's not network. Yeah, are you guys hearing me? I want to make sure. Are you guys hearing me? Indicate.
Yeah, we can hear you. Your
Okay.
network, we can hear you.
Okay.
Enter another time frame. It might show.
Let me check something. Maybe they have closed the charts. Supposed to show me. All right, and here comes another thing. So, in synthetic indices, we also have what we call boom and crash. It sounds funny, boom and crash. So the boom is booming while the crash is crashing. It looks like the name. Okay, the boom is booming, the crash is crashing. What do I mean by that? Let me open one of the here. So here we have what? Boom 500. So in the boom and crash, the ones with the boom something, boom 500, boom 100, boom 1000, and so on and so forth, they are spiking up. Always they are spiking up. Now the movement of this asset is quite different with the movement of the volatility indices, because price movement in this asset is by spiking. Either it spikes up or it spikes down. So the one that spikes down is the crash, while the one that spikes up is the boom. So as the price is moving right now, we have the price at $5,852.329. Okay. So as the price is moving, in the next 30 minutes or 20 minutes, price is going to spike up. But that doesn't mean that price is going to go up forever. Okay. It does not mean that price is going to go up forever. Now, if I zoom out, you will see that I seen it. It's the same. It's looking quite the same as normal charts, even in forex. even in currency pairs. I seen it. It's almost the same thing. You won't notice all this spike until you trade it. Okay, until you get familiar with it. So as I'm talking to you, price might spike up. But the question is when. I seen it. The question is when. When is it going to spike? Is it now or maybe in 2 days time or in 4 hour time or in 1 hour time? All right. So that's when the question comes in. That's when that's what you should be asking yourself. When is it going to spike? So in the process of all this, price action still applies to these. It does not escape price action. Yes, price action still works. See, let's check what's happening here. This is normal downtrend. I seen it downtrend, right? And what? Price taking out liquidity. Price taking out liquidity here. I seen it. Then what? Boom. Price coming down. And price is still going to come down from the look of things. This looks like a rising wedge, right? So price might end up doing this, then boom, to meet up with this unfilled value gap down here. I seen it. So price action still applies to this. It does not escape price action. So any pair at all is tradable with what? Price action. None of them escape price action. So don't panic about it. It's not going to, price action is not going to work. It's a lie. It's going to work once you know what you're doing. That's why I said go back to your basic forex trading and learn these things. Where did I write those notes? I told you guys to learn the basic price action like support and resistance, demand and supply, trend lines, trend line break and retests. It works. I seen it. So as I was saying, price might spike up, but the question is when is it going to happen? So now let's check the crash. Let's check the crash. Crash. Let me check crash 500. So currently crash 500 is in a downtrend. Crash 500 is in a downtrend. So what does crash do? Crash is crashing. It spikes down. It spikes down. Sometimes I trade against the spike. Okay. Sometimes instead of saying trading against the trend, you say spike because it's the price movement spikes down, but it's not every time. Once you analyze, you will know where the price is going. Doesn't matter what the spike is doing. If your analysis is telling you buy, go ahead and buy. So if you analyze here, right, after touching trend line, clearing out liquidity here, I seen it, then boom, buy. If the chart is showing you buy, go ahead and buy. Okay, don't mind the spike. It's not going to do anything. Don't panic. Who is in queue? Is she raising? Mary, do you have a question? Please, if you have any question, hold it till I finish up. I'll soon be done. It's taking long, right? I'll soon be done so that it won't get boring. So like I said, the boom and crash, if that is telling you buy, you buy. If it's telling you sell, you sell, okay? Price action still works on these pairs. Price action still works on them. You have nothing to worry about. Now, currently, the price is going down. I seen it. The chart is telling me that this crash 500 index is going to sell. And if I go to my account and sell it, it's going to sell. The question is, when is it going to spike? That's the question. Because sometimes it will take time, 5 minutes, 10 minutes, 30 minutes before it will spike. And this period, your money is going what? Is negative. Your money is reading negative because it's only when it spikes. It's only when it spikes. That's when you make money. That's when you be in profit. Because once you open a position, price is reading opposite your order. Okay, let's say you put a sell, price will be reading opposite. But when you put a buy, it will be going up because whenever crash spikes, whenever it spikes, it will start buying. So if you put a buy, you're always in profit. But once if it spikes against your buy, you are in trouble. If it spikes against your buy, so just make sure you use your price action on the chart before taking any decision. Okay, profitability is a key. Profitability is what we are looking for. Nobody wants to lose. So make sure you're not doing the wrong thing. Make sure you're not doing the wrong thing. So the chart is telling me to sell, right? So if I should sell this price 500, I will sell it off to this zone. Then also selling off to this zone, there's probability that it's going to break this zone. So here will be what? Here will be used as liquidity. Here will be used as liquidity. Then probably here will be the trigger point to buy. Okay. So make sure you use your price action. You have nothing to worry about. So that's it. I'll be stopping here for today. Tomorrow we'll continue with the remaining class. Now tomorrow we'll talk more about how to trade and what loss size to use. That will be for tomorrow. Any question, please drop it to my DM. Any question? Yes, right now I'm tired already because I've spent over 40 minutes in this class. So any question, bring it to my DM. Any question, bring it to my DM. I'll be posting this video, the recorded video, in my Telegram channel. Okay, do where to join the Telegram channel and watch it over and over again. You have all the time you need to watch it. Understand what I've said. If you have any misunderstanding, bring it to my DM. We'll sort it out. Remember, this class is for free. I'm not charging a dime. I'm doing it all for free. So you guys will understand how synthetic market works. It's easy. It's not hard. They don't manipulate. Once you master liquidity, you are good to go. You don't need to be scared of manipulation. They don't bite. They don't bite. I've made so much trading synthetic indices. And I'm a witness. I'm telling you guys to do the same. Master price action is simple. Synthetic indices might be your breakthrough. It might be your the ingredient you're looking for to spice up your trading career. Yes, it might be the ingredient you're looking for. So if you're having difficulty in currency, you can switch to synthetic. Just try synthetic and compare the two. You come back with your testimony. All right, I'll be ending this class now. Good night, everyone. Make sure you have a nice evening. Bye. Bye. Yeah,
Thank you very much.
you're welcome. See you tomorrow. Section in the Telegram channel. So if you are yet to join the Telegram channel, check the group. You see the link there. I dropped it yesterday, and the video is in the channel. So if you missed on anything, you can go and watch it. Or if you didn't participate yesterday's session, you can go and watch it. Or if you don't understand anything, you can go back and watch it so you understand better. So today's class, we're not going to waste much time because today is the last day and we'll round up today. Okay. Whoosh. Oh, this is plain. This is wrong. All right. So back to the charts. So this is what I want to show you guys today. Today I'll be teaching you guys. I'll be showing you guys exactly how I take my trade on synthetic indices and the kind of strategy I use. So you guys know about breaker block, right? So breaker block works on synthetic indices. Let me show you guys live charts on VIX 100. What our time frame? All right. So talking about breaker block, we have this. Right. Then we also have this. So yeah, the demand zone. Here is the sell zone. So this pattern works on synthetic indices. Oh my God, who's joining now? So this pattern is it works on synthetic indices, same as currency pairs. And I've seen traders who use breaker block on currency pairs, the likes of Tony Ike, Lingard, and the rest of them. They use breaker block on currency pairs. Same applies to synthetic pairs. So I'm telling you guys that breaker block works on synthetic indices. Okay, added with liquidity. Added with liquidity. Liquidity is inevitable. You can't escape that. So master liquidity, master your price action. Like I said yesterday, once you know price action, forget about SMC. I know SMC works on currency pairs, right? But it doesn't work here. It doesn't. The chances of you using SMC here, you might end up waiting for 1 week and you not see your setup. Yes, in synthetic indices, you not see those kind of setup here. The simple thing works is what is driving synthetic indices. Okay, the likes of this is the normal higher high, higher low, higher high, higher low. Now your trend line is below here. Don't mind my drawing on, not sorry draw this thing. So your trend line below the structure, the trend structure, right? Now you can pull out a good entry from here just by waiting for the price to touch the trend line. Yes, it works every time. works every time. It works every time. So what am I trying to say? The basic stuff, the price action, trend line, break and retest, and the rest of them, they all work. They are still valid over here. There's nothing is hard. It's not hard. It's not hard. The only thing you need to do to help yourself right now is know when to enter, which is by what? Learning liquidity. Master liquidity, then you're set for life. Nothing is going to stop you. Yesterday, one of my students did $50 to $500 in the space of 4 hours just by using trend line. The trend of the market, just by using trend line. And his entry was clean. Like I said, once your entry is mastered, once you master a good entry, nothing is going to stop you. Okay, don't go and be entering market. Let's say, for example, we have downtrend, right? All this way they join now. We on this since. So, for example, we have a downtrend, right? And now the trend wants to change. The trend wants to change. And you are seeing the sign, right? You are seeing something like this. Like a what? Inverse head and shoulder. Now, you don't have any business entering from here. Yes, because market will do what? Market can come back to your entry, take you out, and even go back further to this zone. Then do what? Then give you a surprise pullback. This is the kind of thing that happens in staking indices. You will see it over and over again. You'll be like, they have manipulated this one. But no, the issue is you. Why didn't you enter from this zone right here? So no matter what you do, no matter what you feel like, whether buying or selling, make sure you enter from the starting point. If you miss the first movement, wait. Don't rush, just wait. Wait a little bit, then you take a good entry from a zone. Make sure you're taking an entry from a zone. It could be a pattern of double top, okay, or something like this. First push up, then price will come back. Price will come back to this entry, take you out, then before going back up. First breakout, then price will come back and take you out. Now, this will serve as liquidity here. This is the kind of pattern you will see on synthetic indices. I'm just telling you the real truth. Okay? No matter what you do, if you miss the first movement, the first impulsive movement going to your supposed direction, wait. Don't FOMO, fear of missing out. Don't do that. Don't allow that fear to come to you. Relax. Market is always going to come back. Don't be in a rush to take. Once you do that, let's say for instance you saw this push up that changed a character right here, bar. You saw this push up that changed the character right here. You'll be in a haste to take buy entry. Now, DERIV is going to surprise you by coming back to your entry, and your stop loss could be below, right? Now, they will come back here, take you out, kiss your stop loss, and go further by clearing out all these buyers here, by clearing out all the traders that have entered here. So using here as liquidity, then before the massive comeback to the upside, meaning you're no longer in this trade, they have taken you out, you have lost your money because you did not enter from. Now, for instance, let's say you enter from here, right? Even though the price comes back and you'll be in loss, you won't be in that loss. You'll be in much loss like that. Okay, there could be possibility that price is going to come back. So always make sure, no matter what you do, make sure you enter from the starting point of a movement. Examples like this, price coming here, then boom, up, down. Some people will be in the haste to enter from here, expecting that price is going to forever go up. No, price will always come back. Just write it down somewhere. Price is always going to come back, because this whole thing has been designed for us to lose money. So don't be in a haste to jump on a trade thinking that, yes, I'll miss out if I don't jump. If I don't enter, I'm going to miss out. That's voice in your head. Try and take it out today. Try and resist it. Resist the urge of entering a trade as early as possible. There's nothing like missing out. Now, the big boss, the professionals who will be the one sitting back and waiting for price to do his thing. After running around, price is always going to come back to your entry. That's the simple truth. It happens every time. Almost everybody in this class has experienced such thing. Price going to your direction, then coming back to your entry for no reason. Now, the reason is simple here. There's a reason, Sha. The reason is that the market wants to take your money, by creating liquidity out of nowhere. They will take you out. So why be in a rush to take a trade where you can simply sit back and relax? No matter how the chart looks like as if it's not going to come back, believe me, 99% of the time, price is always going to come back to that POI, to your POI that you feel like, yeah, it's not going to come back. It's going to come back. It's always going to come back. So what I'm trying to say is that don't be in a rush to take a trade because you feel like you're going to be left behind and all that. Don't do that mistake. Always wait for price to do his thing. So back to the charts. Talking about breaker block, you can see multiple words. Breaker block here. We have first break here. That is first break here. Then price comes back. Then another break here. So added with liquidity, you'll be able to spot good entry from this. This alone has given you good amounts of money with a good risk management. I seen it. So all this in works. Now, if you look at this whole area, you see that there was a liquidity play out here coming. All this will come in now. So looking at this whole area here, you see that there's a liquidity played out here. Now, where's the liquidity? Who can spot the liquidity? Liquidity is over here. Liquidity is over here. So price went up. Is the breaker block I'm talking about. I'm telling you that breaker block works. It works. It works on synthetic indices. You always see it on the charts. Yes, it works. So for those people that are very good on breaker block, you can go ahead, try it on synthetic indices and make your money. Yes. Then for the rest of you who are too familiar with SMC, we are just too good with SMC and not any other strategy, I would advise you to go back to the basic terms, the basic price action, support and resistance, trend line, break and retest, and so on and so forth. Okay, those basic stuff you learned during your beginner age of forex trading, you are going to use it and make money here. Simple. Add liquidity to your learning. Add liquidity. Master liquidity. If you don't know about liquidity, you can meet me. Then we have private mentorship, and I'll teach you everything you need to know. I'll go deeper and teach you all you need to know about synthetic indices. So I'm just teaching you guys. I'm just showing you guys the few ones I know. I just want to expose little secrets for you guys so that it will guide you to your journey of trading synthetic indices. Synthetic indices is really sweet. It's very, very sweet. But just know, make sure you know what you're doing. Don't, like I said earlier, don't jump on a trade. So now this is liquidity right here, right? So price came back, took out this stuff here. Most traders will put their demand zone here. Why? Because of this. Let me take this thing out. So most traders will use here as demand zone, right? Forgetting that price will always take out liquidity is a must. It's a must. If there's no liquidity, then the setup is not going to work. It's not going to go. The market is not going to push with the momentum it's supposed to push with. So liquidity must be taken out. Very, very, very important. Liquidity must be taken out. So after liquidity has been taken out, price will look for the nearest what? Nearest demand zone here, which is, you can see that this is a clear demand zone here, right? This is a clear order block here, right? Confused order block, because we saw price break out from this zone and creating order block here. Remember, you can also say this is your support zone, because whenever a resistance zone has been broken, it will turn to what? Support zone. So it's simple. Resistance zone broken, then now it has turned to support zone. That's where price used as a level to push up and to continue buying. Okay, simple. Who is raising on Jojo? You can on your mic and tell me what do you want to ask me. So price used the nearest words.
I'm sorry, I don't know. Hello, sir.
Yeah, I can hear you. Speak up. Okay, go ahead. Jojo.
Okay, so I just wanted to say that I'm not seeing your screen. I'm not seeing your screen. I'm not
Log out.
seeing your screen.
No, log out and log in again. Log out
I
again.
don't know if I'm the only one that's having such issues.
Just
The
log out and log
screen
in
is
again,
showing clearly.
please. Is your
Okay,
network,
okay.
Jojo? Is your network? Log out and log in again. Yes, is your network. Nigerian network lagging and all that. So I'm also recording this class. So in case you're having similar issue, don't bother yourself. You're still going to watch the recorded section. Okay, back to where we stopped. So as I was saying, after taking out liquidity, price look for the nearest zone to use and do what? Continue the buy. And that's what happened here. Remember, after the breaker block here, yeah, buyers came here, took out this zone here and bought all the way to this zone, then came back, take out liquidity. Price will always form liquidity. Yes, price forms. If there's no liquidity, price market will create it. Market will create it. I don't know if you guys have witnessed that so many times on the chart. Whenever there's no liquidity, market will always create its own liquidity. And that's what happened there. Normally, it's supposed to be like this. It's supposed to be something like bam, bam, here, right? This near zone, then continuation. See, on a normal chart, you know, they know that yes, we would think it's going to do something like this, by simple, higher high, higher low, higher high, right? That's what they expected us to see, because they know that here we are thinking, oh, everybody's thinking the same thing, but no, they did what? They ended up creating liquidity here. So here was used as liquidity. So price went lower than expected. Take a liquidity. Oh shit. Price went lower than expected. Take a liquidity, then bought from this zone. And this was a massive. Let me see how many return to risk to return ratio. Let me see where is the price range. It's starting from here. After the liquidity, starting from this zone, would go up. then your stop loss below is a nice stop loss. So we have how many? 4 to 16. 4 to 16 risk reward ratio. That's a good win. So it's a good risk management and a good lot size is a massive win for you. Okay. It's so simple. So your take profit should be close to the previous high. Close to the previous high. And price touched the previous high. So your TP here, the market touched that. Yes, that was a good win. So now back to the basic. I'm still telling you guys that I seen it. So these are the basic things. Now look up when price got here. Look at the chart very well. When price got here, you can see that market refused to do what? To create another high. So when you see such things, when you see multiple rejection like this, it's simple. Just follow, trade what you see. Okay, don't use because you want to use breaker block. You always expect that next push up, next push up. No, it's not going to work like that. Make sure you trade what you see. What you see is what you're going to trade. Jot it down. What you see is what you're going to trade. So after making multiple rejection on the previous high, market did what? Started selling. And this is a massive sell. So after taking your profit from here and you take your sell after multiple rejection, after seeing multiple rejection, you are on the right side. Yes, that's a big win for you. So after buying, you're selling. Simple. There's nothing to complicate. There's nothing hard here. There's nothing. You can see the movement is so clean. There's nothing like stupid price action here. You'll be seeing something else. Okay, you will not see that here. The only thing you're going to see here is liquidity, and it's a must. You can't escape from liquidity. Make sure you master it. Make sure you master it. Master liquidity, then you're good to go. Nothing is going to stop you. So you can pull out big numbers from this synthetic. You can wreck them. I want you guys to, after this class, I want to see results. I want to see you guys doing things. Okay, so here is the announcement that I said earlier in the group. So the announcement is simple. I want to host a challenge. Yes, both newbies, both intermediates, both professional. I want everybody in this challenge. You don't need anything. So I'm the one providing you guys the signals. All right, I'll be giving you guys setup on setup. Now, this is the requirement to participate in the challenge. You must have a $50 liquidity. You must have a $50 liquidity before participating in the challenge. So fund your $50. Before funding, you need an account. Yes, you need to before participating, before funding, you need to open an account. So make sure use the link in the group. I'll post it right after this class. Use the link in the group, register your DERIV broker, verify. Use the link in the group so that the verification will be so fast. Verification won't take up to 30 minutes. You are done. It doesn't take time. Sharp, you're done with verification. DERIV doesn't waste time when it comes to verification. And as I'm talking to you, the market is operating. You can see that on a cool weekend, you can be making money. Okay, no stopping on the green. After trading currency from Monday to Friday, you can come here and do one or two. Boom, you're still making money. You're not out of the green. You're still going in. Okay, so make sure you have at least $50 for interested participants. Inbox me in my DM, send a DM, then I will add you to the separate group where I'll be dropping the setup for us. So this challenge will last just for 1 week, 7 days. So we use 1 week and do that. $50 to $200. Yes, $200 is the target. $50 to $200. If you are interested, send a DM. Minimum deposit $50. I don't want who wants to join? Okay, George Emmanuel, unmute yourself. Unmute yourself.
Good evening, sir.
Yeah, good evening.
What if you have a crop account?
Profem.
Yeah.
No, David doesn't have Profem for now. Nobody has created a Profem for them. So we are just doing it with
No,
the.
no. I'm asking to join the your announcement. What if I have a crop account? So I still join.
I don't understand. Is it Profem account, like currency Profem account?
Yes, I have problem account. Is it only synthetic you are going to be dropping?
It's only synthetic now. That's
Oh,
it.
oh.
Yes, only synthetic.
Well, I thought you would drop both.
No currency
Okay, sir.
account. Synthetic. So 50 to 200 in 1 week. Minimum $50. Then boom, we are started. So this is another thing, right? Now, if you look here, you see that all these, previous lows has turned to liquidity as it stands now. Why? Because price has broken out from this trend line, and all this liquidity needs to be cleared out. So I'm expecting price to drop back to that zone. I seen it to drop back to this zone. I'm expecting a buy here. Always trade what you see. You see? I'm expecting a buy here, and market is fast approaching to that zone. So once market comes here, I will see what will happen next. I will check the chart and see what's going to happen next. I have a liquidity in my account about $200. Possible trade it with this setup and maybe turn it to 1K dollars before tomorrow. So for the challenge, make sure you have your liquidity of $50. Then what next? Nothing else, just your liquidity. Then we get started. Let's see how it goes. 50 to 200 in 1 week. You can as well use the money for private mentorship if you want to upgrade your knowledge. All right. So that's it for the class. The recorded session will be dropped in the channel once again. I will drop in the channel, and this is the end of the class. Okay. If you want a private mentorship, if you want to learn further, if you want to learn from me, if you want to know what I know, if you want to know everything I know, if you want to know how I do my $20 to 200, 300, my 20 to $500, 30 to 400, and so on and so forth, how I do those flips, you can inbox me and I'll teach you everything I know. Okay, the fee is not much. The fee is not much. So if you are interested to learn further, or if you still want to remain where you are, no problem. The choice is yours. So that's the end of the class. Thank you guys. Favor a day. Unmute yourself. Speak to me. Favor, should I unmute you?
Good day, sir.
Yeah, good evening.
Like now, so like I came to the class late, but I kind of understand everything you did because I've been practicing my own. So, but now I'm asking like so now, like we should always so now like that zone now. There's something similar that I did in this now, but it was on this on five index. So, but it didn't break that zone, but it went for a continued buy. But it's like tested it multiple times before it broke that zone. That supply zone.
Hmm.
Right.
You say on this what? This what? Which volatility? Hello. You can drop the question in my group if your network is not so strong.
Yes, yes.
You can drop the question
Okay,
in my
okay. So
group.
we,
Uh, I'll reply to you. So I'll be rounding up now. This is the end of the class. Any more question? Just hit me up. I'm available. I'm active. So See you guys in the challenge. Good night.